What's up, everybody, and welcome back to Future Focused Podcast, where we're giving you all the nitty-gritty, actually this particular season on credit fundamentals. We'll talk about some other stuff another time, but I'm here with my boy.
Yeah. It's your man Anthony Smith, man. Just here. I'm checking out the knowledge like you guys and just kind of asking questions to James, you know, somewhat the way that you guys would be doing out there. And then we got Wilson back there on the keys, holding it down.
On the ones and twos.
On the ones and twos.
All right, so last time we were talking about the different types of trade lines. So you guys might remember this little image right here. We're not going to, go into too much more detail about this as we talked about it last time. But, of course, three major bureaus are Equifax, TransUnion, and Experian. They all have kind of little differences in how they look at your credit. That's why you'll see here that, Equifax is 629, TransUnion is 605, and Experian is 625. The reason why those numbers are different is because, again, the system and how the computer program basically is how they grade that. So now we're going to get into some really, really good stuff. And this is very, very important to remember. We were talking about the 3 golden rules of credit. This falls underneath the 3rd golden rule. We can go back to that slide another time on the 3rd golden rule. Or if you guys have any questions or need anything from us, let us know. Remember, this is not financial advice. We're not financial planners. We're just, a couple dudes who
Been through it,
made some mistakes and
trying
learned
to
from
help
them.
you guys out. You know what I mean?
Absolutely. And me, myself, I've been in the mortgage industry, retail, financial industry for quite some time in different positions and whatnot. So, I've helped quite a few people over the course of my career. Don't charge them. It's just, again, walking with them through the process and kind of making sure that it fits for them. And that's the same thing for you. You don't have to listen to everything everybody tells you and do it exactly as they're instructing you to. And again, that's why I think there's a lot of disconnect between the information out there on these platforms versus how you can practically apply it to your life. So at the end of the day, it really comes down to the fundamentals and understanding how that works for you, right? And so that's what we're getting into. So there's two major types of trade lines, which is revolving and installment. A lot of people, again, an installment is they give you $20,000 for 20 years, repayment at 3.625% interest rate. So the payment that you make is in installments because it's a certain period of time at a certain interest rate.
Yeah, break it down. I don't want to say break it down, but that's the way that I would understand it. So an example would be a car loan.
Right, we're going to get into that right now. So like if you'll go to the my pop-up here. I'm not exactly sure what to call it that way, but the screen.
Take a look at the green.
Right. So you'll see U.S. Bank, and this is a credit report. I'm sorry, I should elaborate on that. This is there's different types of credit reports, okay? So most everyone out there is used to, Credit Karma, Experian, which does have...
Most definitely the youth. You got to think about the youth, right? Because
Absolutely.
I feel like the kids are getting a lot more information than what we were getting at our age.
Oh, tremendously.
And it's not that Experian or Credit Karma are wrong. They're just not 100% right.
Right. Well, 100% giving you
accurate.
Everything, right? Because think about it. Think about the platforms as a whole, right?
Yes. They're there to make money, right?
Period.
And if you can download anything for free, it's your job to figure out how this thing is thriving the way that it is.
Right.
And this is the way that Experian and Credit Karma thrive is by selling you ads, right? And recommendations on places to go. I know if I open up my Credit Karma right now, it's going to suggest 3 or 4 credit cards that I'm pre-approved for
Guaranteed to get right now. And what are you going to do more than likely? Let me go ahead and apply for this.
Exactly.
Boom.
So that's one of the ways and probably the most popular way that they get money, right? The same thing with Facebook, Instagram, and all of these other platforms that we love is the ad money is what keeps these businesses alive.
Absolutely. And if you think about it at the end of the day, and I don't know this 100% to be factual, but I guarantee you the credit card companies are kicking back Credit Karma and Experian, because, and I'm gonna tell you why.
They wouldn't be on there, brother.
They have everything about you. They know how much money you make, how long you've been at your address, where you work, how long you've worked there, how many credit cards you've had open, how much money's in your bank account, right?
Why do you think these companies are worth so much money, man?
Right. Now, here, Experian Boost. Let me put it to you this way, okay? I'm going to give you a prime example. Experian Boost, we're like, oh, let me go ahead and do this because it'll boost my credit score. Now, that's great. And I'm not saying these are not useful tools, guys. Don't get it twisted. I'm not saying that at all. They are useful tools. Know what you're looking at. Educate yourself and ask the questions. Nothing's ever as it seems. Nothing's ever as it appears. So when you do the Experian Boost, what is the thing that they have you do? Link your bank account. They're not having you link your bank account just so they can add these trade lines to your credit to boost your score, and so they can dip into your private information and know how much money you got coming in and out of your account. And that is not just a one-time thing. Your bank account stays linked to Experian until you unlink it, right? So all your NSFs and all that other stuff that's going on,
is it good to have multiple bank accounts through different banking I don't want to say industries, but through different banks? Like have a Bank of America card, a Chase card. Do you necessarily want to have all of your banking information through the same bank? Like, do you do business? Is your business account with Chase and your personal account with Chase?
Right. It just depends on the person, right? Because certain banks have different perks depending on if you're having a business account or you're having a personal account, right?
Okay. So is it about finding the one that works better for you at the time?
Absolutely. Okay. But all at the same time, you should have multiple bank accounts. Myself, I have 3. I use U.S. Bank, I use Wells Fargo, and Schools First, right? So Schools First is my personal, Wells Fargo is my personal and business, U.S. Bank is my personal and business. But I like U.S. Bank better for the personal and the business, only simply because I don't have to chase my money constantly, right? So let's say if I had a $10,000 check get deposited into Wells Fargo, they're going to make me more than likely wait 5 to 10 days or whatever it may be. Let me tell you a story. My business partner, I had him, because I'm sure a lot of people know that you can no longer put cash in someone else's account.
Yes.
You
Why is that? Why did that come about?
Money laundering.
Okay.
Money laundering at the end of the day. A lot of people were washing money from one account to another. It's not traceable. It's not as easily traceable, should I say.
Yes.
But anyway, so now they want you, it's a long story, but at the end of the day, and we're going to get into that in further seasons. I don't want to stack too much on your guys' plate right now, but we're definitely going to get into some of those topics later as to why. Nitty gritty. But so I had my business partner deposit a cashier's check, because that's not cash, but it's considered cash, because the only way you can get a cashier's check, for those of you who don't know, is you go to a bank, you give them $10,000, and they give you basically like a money order in a sense for that 10 grand. But it's considered a cashier's check, right?
But it's only the only person that can cash it is you or the person that's name is on there.
The recipient, right. Just like a money order, if you put someone's name on it. Money order can be general or specific.
I learned that the hard way.
Yeah, exactly. No, I
got a money order, left it blank.
And tried to trace it, tried to find it.
I jumped in the shower. We had a party at the house.
Oh.
Somebody got me. And they were like, bro, that was as good as cash. That's gone.
Yeah.
They put their name. And I said, you can't trace it to tell me who cashed it.
No.
Right? They had to put their name on it and cash it somewhere.
Yeah.
So you can't. No, I can't give you that information.
No, man. And I think we've all been there at one point or another. I've done that myself, especially with
everything out all the way.
Well, again, coming from real life, like a lot of times we didn't have a bank account going up, so we were using money orders to pay our bills, or Western Union or MoneyGram or whatever it might have been. But anyways, you know, if you know, you know.
Right.
But. So he gave me the cashier's check. Well, he put the cashier's check into my Wells Fargo account for the $10,000, and so I expected it to be cleared the next day, right? Yeah. So it made the balance available in my account, and then the next day, I did what I did, paid my bills. The next day, the money was gone, and so I called Wells Fargo, and they were like, "Well, yeah, the teller messed up and how they deposited, and it's on a hold because it's a check." And I was like, "Wait a minute, it's not a check. It's a we need to clear it." I'm like, it's a cashier's check. Yeah. I'm talking to Wells Fargo, telling them it's a cashier's check, and this was just crazy to me, man, and I couldn't believe it. Anyways,
the same thing is starting to happen though with Cash App, PayPal,
very much
Zelle, all of these other corporations and ways that people were able to move money, and like the government's all over it.
Yeah, it is. And you know what is it now?
Taxes are coming directly from Zelle. Anytime that you send
Yep.
a Zelle payment, a PayPal payment, a Cash App that isn't friends or family, like somebody that's your friend, your family, your kid, they're like, okay, you guys were doing business of some kind together, that needs to be taxed.
Right. So from what I understand is any money basically in your account that's over $500 is they're now going to be looking at it. The government now has access to kind of see, you know, where that came from, and they're going to.
So what was it before? Was it?
It wasn't
9,009. It wasn't.
I don't think there was any amount. I've never had. And
you know, when you go to like the casino, I'm not a casino guy, but I remember my grandmother going to the casino and she would say, if you won a certain amount,
$9,999. You had to.
That's what I was referring to.
I think it's a 1201 form. I'm not sure exactly what the tax form, but anyways, you got to claim that on your taxes. Any cash that's cash of $9,999 and above, which is really $10,000, you got to file this form on and claim it. But you know, with Zelle, it was different because that typically means a one-time transaction for the $10,000, not accumulatively over time. That's one single transaction for over $10,000. You have to fill this form out because the IRS obviously wants to be all in your Kool-Aid.
Big Kool-Aid.
But don't even know the flavor.
Yeah.
But
only like grape.
But with Zelle and Venmo and Cash App and all that, you know, obviously you're getting it in 200, 500, 1,000, you know, increments. But anyways, now the government wants to know what that is.
It just made it easy, and for a lot of you guys probably don't even know the world that existed before Zelle, before Cash App, before like getting money from one place to another was a mission.
Man, Western Union was it.
What? Western Union lost so much money in this industry due to the Cash App, due to the Zelle, due to the anywhere that you got any app that you can use to send money as a bank behind it.
Right. And it used to be wiring, right? Like a lot of people didn't know about it, but wiring was usually the thing, and they charge you $30. You got to go into the bank. Now you can just do it from your mobile app or your desktop.
To be able to just send money to China, to be able to send money anywhere, it's not even a thing anymore. That has been taken away
easily.
And that was the one thing I didn't know, that freaking the owner of the Timberwolves, is it? No,
Mark
it
Cuban.
Was it?
No,
it wasn't
Mavericks.
Timberwolves.
That's Mavericks.
No, it was the Mavericks that I'm talking about. But it was Elon Musk that started PayPal.
Yep, he sure did.
I didn't know that.
Yeah, Solar City. I think
Solar City. Now he owns Solar City. He owns so much more.
But no, he's had that since back in the day. He bought that when he got his money from PayPal.
Got you.
He bought it the same time he bought Tesla. He got the money from PayPal, and I think he still owns a small percentage of PayPal. But that's crazy. And then I think eBay bought PayPal entirely. That's who cashed him out. And then he did SpaceX. But anyways, and if you guys have never seen Elon Musk's story, man, you need to check it out, like where he came from. It's pretty dope. But
I know I'm throwing you guys for a loop right now.
Yeah,
so I'm gonna let my guy get into it.
This ain't just
what it's about, you know?
Yeah, exactly.
It's not just about the numbers and the nitty gritty. We want to give you guys more than just
real talk.
This is real life experience. We're not talking about somebody else's lives. We're talking about our lives. You know what I mean? Because we're people just like you guys, and we don't expect you guys to listen to us breaking down Elon Musk's life. Like, we're breaking down our own lives so you guys can somehow relate or know somebody that can relate to a story that we're telling you, because this is real life and we had to learn it step by step.
Mistake after mistake, bumping our heads against the wall.
There was nobody that was giving us this information that we're giving to you guys today. It just wasn't there. And if it was there, I don't want to say we were looking in the wrong places. It just wasn't as easily obtainable.
And it still isn't, right? Because if you go Googling this stuff or look on YouTube, you just confuse the hell out of yourself, you know?
And it's the same thing that I say about photography or videography or becoming a DJ. How do you search something that you don't even know what the keywords are to type?
And it's highly opinionated on top of it, right? Everybody has a different reason or way, right?
And then you're dealing with an algorithm to bring you the right information.
Right. What? Based on your behavior, you know, and how you click and like and what videos you watch. But here at the end of the day is really what we want to do with this is make sure that we give you the basics so then you can practically apply it however it works best for you. Because that's what this is about. You know, we live in a world where everybody's constantly trying to tell us how we should do something and live my life. And honestly, we're just almost subconsciously we always fall into that, right? We see how someone else is living and we want to taste of that. So we're like, okay, the best way to get there is to emulate that person.
Correct.
But we forget that that person is not us, and how they move and how they think and how they act is going to be different than what we do. So we might have some moderate level of success emulating them. That doesn't mean that we're going to hit that level that we want or be truly successful in that space, because we never learned how to move correctly in a way that works best for us, right? And that's what's very important to me.
You got to be able to take pieces of information and use those pieces of information into your own life.
Well,
right? Everything is not going to work for everybody.
Absolutely. But know the basics.
Know the basics. That's what this is about.
Period.
Is for you to be able to understand the basics of what credit is,
Straight
what
up.
these things that we're talking about are.
Yep.
So you can make the choices and make the education. Like, if you know that something's wrong and you choose to do it, that's something. But if you never knew that it was wrong, and you do it, then it's a whole nother. And that's the thing that I tell my kids, like, listen, I'm telling you this stuff because I had to learn the hard way, right? And I don't want you to learn that way. But after I tell you, if you still choose to do it, you at least knew what the consequences were for you doing that.
Absolutely. Ignorance is not bliss. It isn't. And then that's really, at the end of the day, what it's about is you being able to practically apply the information that you learn in a way that works best for you, right?
I broke down to my daughter when she turned 18 that now you're only my baby. You ain't everybody, baby.
That's
right. Because you could go to jail for life. They don't care. You were 17 yesterday and you could have committed this crime, and today you're 18, and the judge is gonna lay down the hammer and say life. Yeah. And over here, you would have got 3-4 years and some counseling.
Right.
Over here, you life and it's done forever. So you need to make sure that you guys are making these right decisions when it comes down to your credit, because some of these decisions, they're not lifelong decisions, but they'll set you back 5 to 10.
Right. I mean, any problem has a solution, right? But that's what we're really trying to give you is cutting out the middleman so you can get from 0 to 10. Don't go from 0 to 100. It's about going from 0 to 5, from 5 to 10, to 10 to
yes.
And then how you start moving within that space because of how the information that you're receiving is you're putting it to work is going to either accelerate that or enable you to scale back depending on how you would like to move. And that's really what this is. And I want to step back a little bit and make sure everybody understands what we were kind of talking about the Zelle and the Cash App. I want to bring this to your attention. So if those of you who don't know, if you're receiving over $500, and this is the way I understand it, I could be wrong, but this is the way I understand it, is if you got over $500 coming in your Zelle account, doesn't matter who it's from, family, friends, whoever, the government is flagged now. So at the end of the year.
And is that 501 overall payment? Is it over a certain period of time?
No, overall the year for the 12 months from January to December.
$500 from one person. So if you send me $100 on January 1st, right? And then you send me another $100 January 31st, and then we go throughout the year and we hit May, and you send me $200, and then right at the end of the year you're like, hey dog, you know what I mean? Hey, I lost that whatever bet to you. Here go that last little 100, and you send me 501.
I ain't losing no bet. He tripping. I ain't losing no bets.
Hey, listen, this is a whole nother conversation. We're gonna get him. He gonna lose one day. I'm gonna get him.
Losing no bets.
I ain't got him yet, but I'm gonna get him.
Okay.
He didn't even let that slide. I couldn't even want to pretend. I couldn't even want it a fake little. You know what I mean?
Yes, sir.
But if you send me that 501 and it's been throughout the whole year that it was 4 different things, it's still equaled up to the $500. They're flagging it
accumulatively. Yes, absolutely. And a lot of people don't know that because a lot of people got little side hustles, right? Like you flipping sneakers, maybe you do cakes or cookies, or you sell a service. You're a photographer. You're doing some freelance. You don't want Uncle Sam all in your Kool-Aid, but well, tell you what, they are now, right? Yeah. So what happens is Zelle, Cash App, Venmo, they're reporting those.
Yes, they are. Because
I
they send me an earnings statement every month. Like it's the bank.
Yeah. Yep.
This is what your Cash App did this past month.
Straight up.
I'm like, my what? Okay.
Yeah. What difference? What? Yeah, thank you. I already knew that. I could just go into my history, but they're now required to report this information to the IRS. So what that means is let's say you made $11,000 in total, like there was that much cash, even if it was family or whatever.
Yes.
There are some tax
However it
loopholes.
came.
Yeah, there are some tax loopholes with family members, but either way, what we're getting at, that's a tax question, but what we're getting at is how the government's going to perceive all of this money in and out of your account. Now, if you're not currently employed, you're automatically going to be considered self-employed, which is a 1099 employee. That's how they're going to treat you.
Okay.
Right? So at the end of the year, most people use H&R Block or Jackson Hewitt and all these places. And again, I'm not bad-mouthing anybody, but look, this is from my experience from being a business owner and then also doing my personal taxes. I didn't know any better. I used to go to an H&R Block because I get my W-2 at the end of the year and they give me my money like today and I didn't have to worry about it. Oh, you charging me $800 for that? That's cool, but I get 3 G's today? Yeah. All right, I ain't got to wait for it. I need that.
But you just gave up $800 for 3
no, not even that, brother. Look. Hold on. I'm sorry. Hold that thought. Not even just that. What I learned is H&R Block just has a very cookie cutter way of doing things.
The people that's on the other side aren't necessarily professionals.
Right.
You thought that you were walking into H&R Block and everybody in there was a tax professional.
For 2, 4, 5, 10 years.
No.
Generally
They're taking your
no.
basic information from your W-2 and punching it in the same way that
box
you
1, box 2. If they're W-2'd, put them in here, carry the one, whatever. But and the software now pretty much does all that for them. So I think they go through like a week or a month class to learn how to use the system. I mean, most tax preparers at the time of tax for these big companies. I mean, there are some that I've talked to that have been doing it for years, but just because they were doing it for years, I had my taxes amended by like a CPA and there was like 10, 15 grand left on the table that I could have got that I didn't get. Now I have to amend my taxes, and you don't want to have to amend your taxes because it's not as simple as just, I mean, it is a simple process, but what I'm getting at is being not as simple as is the IRS is going to be like, well, why? Why did you amend your taxes?
What
now
happened?
it could open you up to an audit, and if you're opened up to an audit, it can get nasty. They want receipts, they want times, they want amounts,
they do not care because the way they ran my mom's through the ringer. My mom's did hair for like 20 years. One day she woke up and everything was gone. All funds were frozen.
And what he means is they levied her bank account. They took all the money out of her bank. And
she
they
couldn't
can do
go
that.
swipe a credit card. She couldn't swipe a debit card. She was basically invisible unless she had cash.
Right.
Me and my sister had to come together to pay everything until she got out of this situation.
Man.
That was a crazy time. And it literally took almost a year before they unfroze her, and was like, okay, all of this was whatever. But that was like a long 10 months. You know what I mean?
Very long.
Like,
when you it's like driving, right?
Right. It's like your car payment, you're this, you're that, wherever you got money coming in, and at that time she had stopped doing hair and she was just working.
So she didn't have the cash.
So for the first couple months, she was working at Walmart as like a greeter, right? She already retired. She's working as a greeter. They get her. Boom. Got her. Man. Walmart still sending her checks to the bank account that she has no access to. And for 4 months, these homies did not want to cut her a check. So then even when she got the check cut, the only way that she could cash it.
Oh, you mean like a paper check instead of direct deposit. Got it.
4 months, right? It was cool because all that money was like it was frozen. So I just told my mom, stop crying. It's like a savings account that you can't touch right now. Right? Think of it like that. We're about to work through all this, Mom. It's a savings account. All your money's there, whatever. All your bills are being paid. Like, there's no reason to be stressed out. Man. So she ends up going to like a check cashing place, and they're raping her.
Yeah, 25%, something like that. What? It gets crazy.
I'm like, your little check after, you might as well hold them checks.
Yeah.
And just wait.
Look, I got you, Mom. Don't worry about it.
What did you do? Wait, oh my God, that was a crazy time. But the 1099 thing is real. You know what I mean? So don't think that you're getting around it, or don't think that however big or small a business that you're doing, because over time that shit starts to accumulate. Like, you might be able to get away a year, 2 years, you know what I mean, depending upon how big or small your business is. But if you think you're going to continue to cheat the U.S. government and they're not going to get all their money back,
well, it's not even. He's right, but not so much even cheating, right? Because here's the common problem that's out there is we trust too many other people to manage our money for us,
and that's what happened to her.
Absolutely, she trusted H&R Block or whoever was doing her taxes or whatever
she had
else.
This little tax lady that was falsifying everybody's taxes, and she specialized in whatever my mom's profession was.
Right.
And that's why my mom, and not only her, it was every single beautician that worked in her shop and multiple other shops had to go through the same situation for trusting this one person.
Just because you're getting away with it don't mean it's right.
For over 10 years.
Don't mean it's done the right way. And that's really, really at the core of what we're preaching on this and what we're talking about, and what I really want to drive home is just to really get you guys to start asking questions, because I know I'm going to piss some people off by saying this, but it's not anybody else's job to watch our money for us. Okay? It's no one else's job to watch our money for us. So you have to get out there and educate yourself. I'm not saying you need to be a tax preparer, but know the fundamentals.
Period.
When you get your tax returns back and you just happy because you got $7,000 back at the end of the year, right? So you signed the dotted line, and I guarantee you 80% of the people out there don't even look at their tax returns or know how to read them and see, okay, well, I know that's okay, this is okay, because there's plenty of information, and it's all at your fingertips, folks. We got internet, we got YouTube, we got so many different outlets that will teach us and let us know, okay, well, is this the right way or is it not the right way, right?
And don't feel stupid for asking questions.
No.
Right? The only stupid question is the one that's not asked.
Absolutely.
So you guys got to ask questions, and if you don't know, no matter, the same thing I tell my daughter, she just turned 18, like, ask.
Straight
Come
up
to me first. If I don't have the answer, I'm going to put you I'm gonna put you in somebody's face that can give you the correct answer,
or guide you at the very least.
I'm not the smartest person in the world, and I'm not saying that I am, but I know there's smart people that are around me.
Absolutely. I mean? And that's what we're going to give you here too, is those resources, right? You don't have to know where to go anymore. All you have to do is hit us up in the comments, and we implore you, please hit the subscribe button, the notifications.
And soon this thing is going to be live, baby. So
yes,
towards the end of the show, man, the last 15 minutes, we're going to be taking
season finale.
Yeah, you guys' questions and different things like that. We're just building up to get this audience out there to the right people, man, because we're trying to give information. We know the algorithm isn't necessarily going to like what we're talking about and the way that we're giving it. So we might be at the bottom of the algorithm. So we're going to be dependent upon you guys to share this thing, because one of the biggest things me coming up was word of mouth. You know what I mean?
Still is.
You guys spread the word, you know what I mean? And let people know of age, of color, of genre, whatever the case may be, spread the word to somebody who you feel like could take this information and really use it.
Well, it's time, you're going to hear me say this a million times, and I really mean it from the bottom of my heart. It's time for the narrative to change. They've had their foot on our necks for so long, and what I mean by they is, who they is. It's just the system, and I don't necessarily mean the government, but it's really the corporate America, the big boys who run everything, because all we really ultimately are to them is cattle. And what I mean by that is, how you harvest a cow for steaks, what they get from us is our money. So they keep us, happy, and give us our cushy little jobs, and, dangle those Mercedes and the Louis Vuitton. They make all these things more obtainable because, I'm not saying everybody, but a lot of us either like the way other people perceive us when we have nice things, or we feel like that we've made it because we have it.
It makes you.
It does. And I'm not saying anything's wrong with that, because you can see, look, I mean, there's nothing wrong with nice things, but does it define you?
Right. Anything that you get that somebody else can't necessarily afford or get makes you feel of a higher stature or class.
Absolutely.
It's just the way that we feel.
It's just human nature.
People. It don't matter about the corporate this, the corporate that. If you show up to a family event in a brand new Benz with the Louis bag,
right?
You know what I mean? Grandma's gonna be like, "My baby doing good. Yes. Look at he. You know what I mean? Look at his wife looking good. He done stepped out with the gold chain, the rollie out the. I told y'all James was gonna be something.
That's it.
He wasn't gonna be shit, even though.
That's it.
At the end of the day, it only matters to those that perceive it that way.
Right. Absolutely. And again, nothing wrong with that, but just does it define you or not, and at the end of the day, we really want to make sure, again, that this starts shifting. So,
and then sometimes it takes those things for you to get in different seats in different situations.
Absolutely.
Right? You may be completely against the men's. You may be completely against the Rolex, but the Rolex is going to bring you the attention in the business that you're doing.
Use it as marketing.
Period.
Absolutely.
It is a marketing tool, and the way that all these rappers and people are doing it now, it's a part of their business. right? So they're able to write off this jewelry that you see. They're able to do different things like that because they're in the entertainment business, and this is a part of that business.
Or even entrepreneurs, right?
Yeah.
As you start leveling up, let's say you started an e-commerce store, right? Let's say Amazon, or you're doing drop shipping or affiliate marketing, whatever it may be. Let's just say you have an online store. Let's keep it simple. And you start blowing up, right? And then people start taking notice of you, which these other, it could be a distributor, it could be a supplier, you know, where you're getting your merchandise from, and they invite you because of the numbers that you're doing to their wholesale event. It usually shows, they call them, but you go there and you can buy merchandise, usually at specials or discounted rates. But anyways, when you get to a certain level and you're in those circles, sometimes, a lot of the times, most of the time actually, you're not able to level up if you don't fit the bill. Right? A lot of people won't take you serious and let you into those bigger circles because they don't feel like you're at their status. You know, it's just life is a giant high school. That's all it is. Everybody clicking up the haves, the have-nots, you know, and all this and that. But we all know that, especially in the world of finance, the better your watch, the nicer your shoes, the better your belt, your car
means something.
Exactly. They're gonna let you in, and even if it's a fake Rolex, and you know you got some knockoff shoes,
you borrow somebody else's car, the whole nine.
Hey, do whatever it takes to get into that circle, because if that's not what defines you and that's not what's driving you anyway, what's the harm, right? But
and I tell Wilson, my partner right here, the same thing all the time. We show up to meet these people for their wedding, right? It's the first time they're meeting us. We show up right on time. We're not there 15, 20 minutes early because I want them to see the way that we pull up.
There you go.
The way we jump out the car. The way that I want the perception to be we need these guys before we even sit down. Now, we could show up in the 99 S10.
Well, let's think. Well, hold on. Think about the psychology, right? If you roll up in a Range Rover or a Benz, they're like, these guys must be good because look what they got.
Exactly.
Right? Even if you may not be.
And Wilson did not. He agreed once he understood.
Yeah.
But before that, it was like, I don't care how I'm going to pull up. It's the work that's going to speak for itself. But when you can sell the job before you even sat down,
the door opens, right?
Period.
And then you don't have
You're
to break
hired
through
before you even open your mouth is what I'm saying.
And we could do it either way.
In a lot of cases, because for some people that doesn't matter, right? And then
Right.
for other people, it matters so much, because a lot of times, especially in our industry, the people that are paying for these weddings, these venues, these different locations aren't even the people that we're sitting in front of.
Right. Exactly. And not to mention word of mouth and marketing, and they're going to talk and, hey, look at these guys. They did such a great job, and they must be good at what they do because of these. But again, don't get it twisted. We're not saying that these things are necessary in order to be successful. We're just saying that it makes it easier. It has the potential to get you in front of the decision makers a lot quicker, and those who have already been doing it, so you can learn from them and maybe elevate a lot quicker, right? But the nature of the beast is, the reality of it is most of the time, if you're not dressing the part, you're not going to get in the club. You're not. That's just the way that it is. But back to, again, just question everything, and we'll get into, you know, some things on taxes. We'll have some special guests on, people that I know and I trust and have for years to do my business taxes, as well as obviously my personal taxes. We'll get into trust and everything else. But back to a trust account, our trust funds and whatnot. That's a whole separate topic, but that kind of all gets tied into this big umbrella that we're doing. But we're going to go back here. All right, so you'll see here we were talking about installment loans. There's, again, two different types of trade lines. A trade line is a specific line of credit on your credit report. For instance, you know, Care Credit, as you see here, is a revolving trade line. Revolving, again, you might remember from the first episode, is you have a limit. You use that. Right? Let's say you use $4,000 limit. You use $300 of it. That means that you have a $300 balance now. But once you pay that $300 back, it goes back into your limit and increases it back to $4,000. So you use it, you pay it back. You use it, you pay it back, revolving. And that's ultimately, the revolving trade lines is how your credit is primarily governed. How good your FICO score is or isn't is directly going to correlate to that revolving. Is directly going to be towards that revolving trade line. So when we're looking at installments, now installments again are vehicles, Sea-Doos, motorcycles, jets, airplanes. Student loans can be an installment. Personal loans can be an installment. Again, you have a certain interest rate over a certain fixed period, and then you repay that money. It doesn't become available to you again. So you're paying in installments over time at a certain percent interest rate. Now, that doesn't really have a whole lot of impact on your credit score as long as you're making your payment on time. I mean, your credit score will go up incrementally over time, and it is good to build that payment history, but ultimately you'll see your score stagnate. It's just going to stay there and not really do much if you just have a car on there, which a lot of us do. A lot of us only have our vehicle on our credit.
The first bill that I feel like I received was a cell phone bill. Right?
Yep.
And the one thing that I realized about a cell phone bill young was it couldn't increase my credit score. It could only take away.
Yeah. If you made a bad payment.
Right.
You know, if you missed a payment.
When I was young, the cell phones weren't set up the way that they were, right?
No.
There was like certain times that you wanted to use your cell phone because minutes weren't free until after 9 type deal.
Exactly.
Then text messages came around and you only had 250 of them, and they didn't tell you that the 250 was
wasn't no unlimited
deducted.
data plans back then.
No, it was you had 250 text messages, and the way that worked was I could send, and if James hit me back, that was 2. That wasn't 1.
Exactly.
I thought it was 1 every time I sent.
You eat that up quick. You can imagine.
Mm-hmm. And just because it was new and the youth and people didn't understand the way that it worked, I saw a lot of people of my age in the early 2000s really messed their credit up
with cell phones.
A cell phone.
Yeah, straight up. And it was like a line of credit. Like it was, and if you got a cell phone, you knew your credit was good, right? Because back then they didn't let just anybody get a cell phone. You know, it wasn't like that, and you had to have decent credit. But it's crazy. So, but back to this. So in today's age, you know, your revolving trade lines, and again, the installment, you know, pay it on time. It's all good, but you don't want to focus on that and how quickly you pay it off. It could increase your credit score a little bit, but not nearly as impactful as maintaining your credit utilization on a revolving trade line. And what I mean by credit utilization is you'll see here, and let me take this for instance. You can see that it's a care credit. A lot of people are familiar with what care credit is, whether you're going to the doctor or you have a pet or something like that. You use that. But the key thing here we're looking at is the REV, which means revolving. Now, the number right above that, REV, right there is the 5,000. That's the limit. So if we look kind of towards the top, you see where it says high credit limit. That's what that's correlating to. So 5,000 is the total limit on the card. This current balance on this credit card is 3,448. So the main, again, if you don't hear anything else I say through this particular season about credit fundamentals, is credit utilization. Now, when you are trying to optimize your score, that means trying to make it the best that it could possibly be because you want to go buy a car, or maybe you're looking to purchase a house and you want to max out that credit score so it gives you the best interest rate. Because the higher your credit score, the better interest rate you get, okay? Hands down. That's not the only factor, but that's the primary factor, and how good your interest rate is. And look, you know, a lot of the times we'll step over interest rate as long as the payment fits within our budget. Yeah. Why do you think they put those big, nice cars in the showroom at the dealerships, right? And why do you think they take 4 hours, 5 hours to write up a simple contract? I used to sell cars and was finance manager for a long time for a few dealerships as well. I was a closer, and it was a psychology play, right? Mm-hmm. And we'd put the $40,000 new TRD Camry right in the showroom, and then we stretch you out 2 hours because while you're sitting there, you start looking at that car. You're like, man, I wonder how much more that payment is. How much? Hey, James, come here. How much more would my payment be for that? And, you know, everybody's payment when they go into a car dealership is they want, like, no money out of pocket, no money down, or maybe $2,000 max down. And what do they want the payment to be? $250.
Yeah.
I want that payment at $250. Now, as long as you get that payment in that realm, you're not usually, most people, and let's be real, don't care about, they're not really thinking so much about the interest rate as long as the payment fits, you know. But how they get you in that payment is stretching your term. It used to only be like 2 to 3 years max on cars. Now you can go 4 or 5. You know, I've heard longer, but I've only really seen 7 years on a car loan. So, but anyways,
you say, I can get you that 250. It's gonna be 7 years.
But they won't even say that a lot of times, right? That's not the pitch. That's not the pitch. They're just saying, I can get you that for 250 right now. Boom, boom, boom. And then when you sit down, you're so happy because obviously a car is an emotional purchase, and you're going through and you've been so burnt out there all damn day anyway. You're like, man, I can move that over there just in case. I mean, 7 years ain't bad. Okay, well, my taxes, I can make an extra payment. That never happens, right? Most of the time, we don't usually execute that. But bottom line is
You've never thought about 7 years in advance.
Nope.
Ever in any other part of your life besides right now when he's talking about 7 years and you're just like, yeah, fuck it, let's go.
Yeah, let's go. I'm good. I'm good. So, but the point I'm getting at is we got to be aware of these things all the time, right? Ask questions, really do the math. But that's why a lot of times we can't do the math because we don't have the information in order to know how to do the math. But that's where we come in. You know, that's where I come in is to give you guys the basics so you understand, okay, how do I calculate that interest over time, which will be in season 2. We're not going to tell you what the theme of that season yet, but part of that will be in season 2. Well, not part of it. All of it will be in season 2. So back to this. So credit utilization. So when you're going to purchase a vehicle and you want to max out your credit score, you want to work on the credit utilization. Now, a lot of different platforms and companies at Lexington, well, a lot of these other people out there will tell you 30% is usually the magic number, which is not wrong. I mean, it's decent. It'll still help you. And what I mean by 30% is if you have a balance and you have a limit, you could divide the balance into whatever the limit is of that credit card, and that percentage will tell you what your utilization is. You divide the balance into the limit, and it'll give you what the credit utilization is. Anything over 50 is going to negatively impact you, meaning your credit score is going to more than likely drop. Okay, so if you got a $3,000 credit card and you have a $1,500 balance on it, your credit score is going to start going backwards. But if you got, a $1,000 credit card and you have a $300 balance on it, it's gonna help you. It's gonna increase your credit score, and then you make those minimum payments for typically 1 to 2 to 3 months, and then pay it off. Then if your score is not quite where you need it to be, do it again. Charge it another, whatever's comfortable for you ultimately, But at the end of the day, and I'm sorry, I kind of got off the track there. I want to go back to what the magic number is, which is 15%. A lot of other companies will tell you 30% is the magic number, but 15% from my experience, from the 600-700 people that I've helped with credit, it's 15%. Balance versus limit. So what that looks like is if you got a $1,000 credit card, that's $150 balance. Okay, and you don't want to, when you're working on your credit score, you don't want to buy something and pay it off right away either. When you're working on your credit score to optimize it, you don't want to buy something and pay it off. The reason why is there's no credit utilization. Because the financial institutions, like say here, this is Synchrony Care Credit.
Do you agree with Greg Cardone when he says cash is trash?
No, okay. No, absolutely not.
Quick question.
I love Grant Cardone, but there's some things that he says that I'm not in line with. But to each their own. Yeah. If that works for him, I mean, I'm not in his world.
Is he talking from a billionaire status?
Absolutely.
Okay.
Absolutely. Absolutely. Okay. But it's all about leveraging your assets, no matter what they may be, and cash is an asset.
Those that don't know, Greg Cardone is a real estate mogul. We'll call him that. He has like $3.5 billion that his company manages, is what he likes to say. Yeah. Right? So he owns a bunch of apartment complexes in like Florida, all over the world.
He doesn't believe in home ownership. He thinks it's wasting your money. You should lease your houses. But we'll get into that in a minute. I want to stay on track with this real quick. So your $1,000, if you have no utilization, meaning like if you have a $1,000 credit card, you charge it your 15%, which is your $150. And you pay it off right away. See, all the credit cards have a certain day a month that they report to the bureaus, right? So they report to TransUnion, they report to Equifax, they report to Experian.
Every time I get done with this show, I feel like I need to make a credit card payment. I ain't gonna lie to you. But go ahead.
What's up? And I hope you guys feel the same way, or at least start working. And look, it doesn't need to be these leaps and bounds. If 150 is out of your budget, and that's what we need to focus on, is staying within our means, right? Don't just charge whatever 15% because you heard it on, a podcast with James. It's whatever works for you. If that amount's only $50, I just say 15 because that's kind of the max that you would want to do if you're optimizing your score, right? But if it's $50, do 50 and then make your minimum payments of $5 every month. And then that way it's a little more manageable, because what we're trying to do is get you into a mindset that works best for you in repetition, right? So once you start understanding the mechanics behind how all this works, and you're able to practically apply it to your situation, and it becomes almost autonomous, like you're automatic every time you know how to do it, then you can move on to 150. 300, and keep moving
Bump
up.
it up.
Because the higher the limit is on the car, the more impact it has on your credit, right? So if we have
How often should you wait before you ask for an increase? Because if you start off with like that basic,
12 months.
I'm 18, I get a $300 credit card. After 12 months, I need to be asking for an increase.
You should, if you can
Now,
manage
is it
it.
asking for it? No. But even if I can't manage it, just to get my 15%, to where I can actually use my utilization of that same card a little bit higher.
Well, yeah, if it's comfortable for you.
Okay.
That goes back to what we're saying. If it's comfortable for you, yes. Don't, because that's where we bite off more than we could chew.
Okay.
So we made our payments on time for a year on that credit card, and then we get an increased limit. Let's say it went from $1,000 to $3,000, and it's our nature. Let's not fake the funk. It's our nature. We go out there. We're out with the homies. Right?
Max that Joan out.
Max it out. Or
all the drinks on me. My shit just got lifted.
One night, right? You're thinking, how much could the drinks be? It's like $600. But then, after that weekend, again, you get flat tire, car breaks down. Next thing you know, you're maxing out the card and you done got yourself in trouble.
Everybody that's young out there, listen to this right now, because my mom dropped a gem on me and I really listen to this. Everything your parents tell you, don't really listen to.
Yeah.
If you are going to offer to pay for something for somebody, tell them at the end of the night. Tell them at the line. Right? Because if their choices 1,000% change on what they are eating when they think it's on them or they think it's on James.
That's it.
So
isn't that cold part though? You're supposed to be my homie, but you want steak and lobster when you know damn well you would
was about
never
to get
order
that chicken and broccoli.
Exactly. You got what you got on specials tonight? Is it happy hour?
That part. If you are going to pay for your homies anything,
that's a great. I've never heard that's great.
At checkout.
Absolutely.
No matter if it's food, no matter if you at the movies, he's not gonna get that popcorn.
Right.
Once you get in there and hey, what's your Cash App? And you shoot it back to him, he like, okay.
But if you tell him,
right, if you tell him before you go to the movies, he gonna need that I need that large popcorn, that Slurpee he wasn't gonna get. I ain't never seen you. What?
Yeah, see? And that's I've never heard that before, because I have a habit of doing that. I'll take care of people because that's just how I am. When we go out, and if I have it, I'm going to make sure my people are good. But
and if it's the shoe on the other foot, don't do James wrong.
Please don't.
Order what you would normally order. But
exactly.
I'm going to tell you 9 times out of 10, I'm getting the steak and lobster on James.
That's it.
So,
well, hey, if we go on to Red Lobster, what's up. It's pretty self-explanatory, right? If you know I'm paying and we go on to Red Lobster, I would expect that. We
celebrate tonight, James. I got you.
Expectations, right? Expectations. You know what? As a co-part, I took my family to Ruth Chris. My mom had gotten married. And we're straight hood, right? So I know I don't look like it, but we'll share the story another time. But we were at my mom got married. And we were at Ruth Chris, and I was doing pretty well at this time. So I told my family, told my mom, I'm going to take everybody to dinner, everybody that was at the wedding. So it was my mom's husband's parents and his sister and his family, and then, of course, my mom, my sister, my family, my wife, my kids. So we're at Ruth Chris, and my mom had never been to Ruth Chris, or my family, period, had never been to Ruth Chris. So, and I'd only been there once before this. But anyways, so my mom orders, no joke, I'm not kidding. She orders a filet. Butterflied. Well done.
What?
A filet butterflied, well done at Ruth Chris. It was one of the most embarrassing moments of my life. And it didn't stop there. Then she asked for ketchup. She's always eating her meat that way. I never kind of put two and two together.
All
you know,
day.
she don't
Catch up
eat
on
medium.
everything.
She don't eat medium or medium rare and all that. And she don't really care too much about it. She had the audacity after dinner to tell me, I was like, Mom, what did you think? You know, and she was, she said the TGI or the Jack Daniel's steak at TGI Fridays is better. I was like,
I'm gonna tell you guys.
And I spent hold up, I had $120 for just one person to eat. Hold up, and that ain't even half of it. My sister brought her friend. My sister brought her friend, who I don't even like, you know, but didn't tell me that she was coming. What if I didn't have the money?
Yeah.
Right?
Yeah.
Didn't tell me she was coming. She's ordering steak and stuffed mushrooms and all this and all that. And then, but anyways, needless to say, my family thought it was just okay in TGI Fridays. Not only my mom, even my sister was like, it's all right. Ruthie, her friend, was like, it's all right. I'm like, ain't this about $1,800, I think the bill was that night. You know, this was like 19 years ago.
If you wouldn't have done that, the bill would have been 6 or 7.
Yep, it would have.
If you would have taken, if all of those, hey, I'm going to TGI Fridays, Mom, I got you.
I wish I had known, brother. I wish
everybody
I had known.
came along and you didn't say nothing until the bill came. Slid her the card, walked to the restroom, came back, and everybody's sitting there, and you go, hey, it's paid for. I got it. Let's go.
That's it. Lesson learned, though, right? But hey,
I'm telling you, Mom's told me this, and I was 18 years old, and I promise you,
that's good advice, Mom.
I've watched this happen on both sides of the spectrum.
Yeah.
Right?
Yeah.
And she was 1,000% right. And I feel like that's one thing that I took from
that's real talk. I never really thought about that. Straight up.
Gave me of, you know, like it is, you know, and no matter if it's McDonald's, it don't have to be Ruth Chris. It don't have to be the most expensive place that you at. It don't got to be Gucci. You know what I mean? Because if you walk, I walked in. My boy told, listen. I walked into Gucci with my homie and they took us to the back.
Ooh.
That's how much he's there.
VIP. Okay.
These are the new items. I already got your size ready type deal. And he's like, hey, take care of my mans.
Got it.
I'm shopping off of my budget. He didn't say what he was buying.
Exclusive ain't even out. Double the price tag because can't nobody get it price. Everybody, you know what's up.
I'm like, this little T-shirt, right? You want $375? Right. For this little T-shirt?
Paper thin, look like a Hanes straight out of 5-pack from Target.
I walked back and I said, I don't even want the shoelaces.
$300 shoelaces too.
What? Yeah. I'm like, I you know, if I'm not gonna buy it for myself, I don't expect for you to buy it for me. Right. And I don't care how much money you have or what you're worth. That's just the way that I'm
the same way, man. And it's a little excess. You know, there's a line. There's nothing like wrong with having nice things, but I do believe, you know, the propaganda behind the really big brands, they exploit our culture, our people. You know what I mean? They don't give two craps about us. Anyways, that's another story. But okay, back to this. Remember, with credit utilization, averagely, you know, on a month-to-month basis, you don't want to have
hold
on one second, a balance over 50% of what your limit is on a consistent basis, right? And I know that's kind of hard to maintain because life happens, but that's where I keep preaching about discipline and finding a way that works for you, because you want to be able to implement this almost like automatic, like autopilot, to where you're always consciously aware of this. And that's why those apps like Credit Karma and Experian are really useful, because what do? They're constantly notifying you of what's going on with your score. There's been a change, because the way that we fall back into old behavior is not either holding ourselves accountable or having someone else that can hold us accountable or constantly in front of us to remind us of what it is that we need to be staying on track with. I mean, we all have done the New Year's resolution where I'm gonna get yoked, I'll be 300 pounds, or I'm gonna lose this much weight. We may do good that first month or two. But what happens? Life, right? Yes. Kids and
your
work.
Life doesn't change.
F it. You know, I'm tired. I don't want to get up early. But anyways, but once we get into a consistent habit, let's say some people it only takes 2 weeks, some is a month, some is 2 months. Yeah. Like me working out, like it took me forever. I had every excuse in the world. I'm running businesses, I got family, I got but you know, I don't want a gym membership, right? But you know, I grew up old school where like the homies, we used to always just work out in each other's garages after school. That's what we did. If we wasn't playing ball, we was in it was in the garage.
Yeah.
But if I knew if I got a weight set in my garage, I could no longer give myself the excuses. This wasn't about anyone else keeping me motivated, because at the end of the day, some of us don't have anybody else to keep us motivated, right? Nor is it anybody else's responsibility to help us stay motivated. It's our responsibility. But again, that's why I go to baby steps. If we do this incrementally and build the system and the way that we do things, and this is what's worked best for me, is I may try something and screw it up and then try it again a different way and screw it up, and you know, and just keep doing that until I kind of take a little bit of this and a little bit of that, and then finally find something that works for me. Like, anyways, and looking back now, it's a part of my life.
Yeah.
It's just something that I'm used to, getting up early, and I hated getting up early before, man. And I'm talking, you know what I mean. I ain't talking about 9, 10 o'clock. I'm talking 6,
right
7
now, and I'm talking like for the last 15 years for sure, been having to get up at 4:30 a.m. Right?
Crazy.
And it's crazy to think that you could get up for 4:30 a.m. for somebody else, but you can't do it for yourself. That's
it, man. And that's cold part about it, man.
Everybody's life structure is built differently. And as long as you have a routine, right? My dad has a routine of being a night owl. He's the dude. He's not going to be up early. He's not.
Same here.
But he's going to be up all night long. And if that works for your business and the type of business that you do, what does it matter what revolving clock you're on, no matter if it's 24
Absolutely.
hours?
And that's it. Don't listen. I mean, take a little bit of what other people say, but that's a great point, Anthony. Do what works best for you. Stop listening to all. I'm not taking anything away from the Tony Robbins and all the other guys out there that do, you know, fitness and motivational speaking. Take what they say with a grain of salt and learn how to practically apply it into your life in a way that works best for you. Because if we're trying too much to obtain someone else's goal, it's not about us. And if it's something that we love and we have an affinity for, then naturally we're going to do it. But Anthony made a great point. We're willing to bust our butt for somebody else every single day, giving them damn near everything we got, you know. Plus some. For a W-2 check and a 401k and some benefits. But when it comes to ourselves, we won't even give ourselves a quarter of that effort. And anything that we do. If you were to apply, by the time these podcasts are done and you get through season, let's say 2 or 3, you'll be able to have all the tools you need to say, you know what? I don't want to work in my 9 to 5 anymore in this W-2 world. I have all the tools that I need to start my own business. Now, whether you decide to maybe work both at one time, you start this little side hustle and then you maintain it because you're started, because these will be incremental steps, right?
Working.
You're not just going bam, chink, you know. You can do it in incremental steps, and then once you have that habit and you have the system in place, you're going to eventually be able to make that decision whether you want to continue to be on the slave ship
or not,
or you don't. You know, you want to do your own thing. But that's a great point, Anthony. We'll do all these things for so many other people, but we won't do it for ourselves, you know, which is unfortunate. But you know, as long as you don't go, again, on credit utilization, if you can maintain around 50% consistently when you're getting, let's say 3 to 6 months before you know you're going to need a car, at least 3 to 6 months before you know you're going to make an RV purchase, or maybe you want a razor or a motorcycle, anything that's major, a house specifically, you want to start working on these steps about at least 3 to 6 months prior to that.
How long should somebody, before they get ready to buy a house, when do you suggest them going to a professional to see what they need to do to make sure that they're ready to?
As soon as you have the idea,
purchase.
as soon as it pops in your mind that, hey, I want to start getting ready for a house, talk to a professional right away, because it should still at least be 3 to 6 months ahead of time. Because, like, for instance, if someone's talking to me in that capacity, first thing we're going to do is look at the credit, you know, and then I'm going to make sure that they understand what they're looking at, you know, see what their level of understanding of the basic mechanics of credit is, and then we start adjusting from there, right? You know, maybe it's paying some things down. Maybe it's adding some additional credit cards to help boost the score. And I know that sounds crazy. A lot of people don't understand how adding a credit card can boost the score, but it's all in how you do it. That's why the credit utilization is so important, not only for new credit but existing credit. But But we can, make the moves and adjust the credit as it
And
needs
do
to
the
be to
small
increase the score.
things. Set the
Yeah.
alarms to
Absolutely.
make sure those payments are made on time.
Absolutely.
Because life happens. You forget to do it. They have something built in on the app that's supposed to remind you, or maybe your credit card is through the bank and it's going to take minimum payments so you don't worry about payments. Set your own reminder, just because maybe that month if the bank was going to take that minimum, you could add something to it.
Absolutely. And even if it's $5 extra, even if it's $10 extra, it's not necessarily the amount that's what's most important. It's you and getting into the mindset of it becoming a natural occurrence, a regular occurrence for you to do that. And again, that's why we fall short too much, because we're thinking we got to take these leaps and bounds in order to get to where we're going, when we don't.
Right.
We don't. It's a mindset. Perception is reality. Think about this in life. Anything you've ever wanted to do or not do, you are the one who changed that or made it happen. It wasn't circumstantial. I don't know about you, but ain't nobody ever fell out the sky and was like, hey, here's this opportunity. Here you go.
James,
you know what I mean?
me.
I'm just going to give this all to you, and then what are you going to do with it? There's been some things here and there, but nothing like crazy. Mm-hmm. But our perception is our reality, is what I'm getting at. All you have to do is make up your mind and decide to do something, and then just put one foot in front of the other and take the next indicated step. If it's getting your credit up, understand the fundamentals. Be like, okay, well, how does credit work and what do I need to do with it? All right, well, I just watched James and this other people all talk about credit utilization. So let me take my little funky $300 credit card that I have maxed out right now and look at my budget every month and see what I can afford. Okay, do I go to Starbucks 5 days a week or 3 days? Do I eat out 5 days a week? Cut out one of those days. Take that extra $7 or $14 or whatever it is, minimum of $7, right? Save that extra $7 and make an extra payment to your credit card. You don't have to cut it out completely and tell yourself no, just scale back a little bit, right? Whatever that may be, because we all do a lot of things that we don't need to do every month to spend money frivolously. Okay, the average person's bank statement that I go through spend $175 a month on ATM fees alone. The average person's bank statement that I look at spends $175 a month on bank fees alone. And you know what the worst part about that is? They don't even know.
No.
They don't even know. When I bring it to their attention, it's a surprise. Yeah. And then I'm like, well, hey, the symbols on the back of your debit card, normally if you go to one of those ATMs or go to your bank, whatever your bank's at, your bank should have several ATMs. I know a few don't, credit unions, smaller banks, things like that. But plan ahead. If you know you're going to Disneyland or you know you're going to go out for the weekend, on your way home for work on Friday, stop by the bank, the ATM, and take out $200-$300.
The thing
whatever
is,
it is,
though,
save
James,
that money.
I want to say the banks in these places push off. It's so much safer to use your debit card because it's almost insured, right?
Right.
If you lose your debit card, it's replaceable. If you lose this cash, it's gone.
Well, because of the money, right? Do you think that's not a marketing strategy?
It 1,000%
you know what I mean?
is.
1,000%
is. But that's something that's drilled into your head
right
from so young.
Convenience.
Yes.
Convenience. That's what it's all about.
Something that's drilled into your head so young, because I want to say the only place that I continuously go to that always reminds me there's a fee is a gas station.
Arco, 35 cents.
Yes.
Liquor store,
time.
50 cents.
Yes.
And
you don't think about those little transactions.
$50, $50. But think about how much we use our card in just a month span, and it adds up. Now, I don't know about you, but I can think of a million other things I could do with $175 other than drive down the street and throw it out the window.
Yeah.
And what you're going to get from Future Focus Podcast as well is what to do with that $175.
Right.
How do I put my money to work for me instead of me working for it? Because that's what you're doing.
There was a thing that Bank of America had a long time ago. It was called Keep the Change.
Yeah.
And I don't know if you remember that, James, but this was early 2000s. And what it would do is whatever you spent on your ATM card, whatever the change was, say you spent $19.20, they will put the 80 cents in your savings account.
That's dope. That's a really good plan. Really good.
it was super dope for me because at the end of the year, you don't realize that you're saving all of this money, right? So no matter what the change was, whatever it added up to be to the next dollar, it would go automatically into your savings account, right? There wasn't a fee for it. There wasn't like no hidden anything, blah, 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 looked into it. There was no money that they were taking away. They were just trying to make you aware of what the change could do.
Absolutely. And that's a great way of doing that. But I know we're getting a little short on time here, and I just want to put the period behind the end of the sentence on credit utilization. You know, whenever, again, if it's a consistent basis, you don't want that balance versus limit being over 50% if you can help it. We know life happens and it's gonna hit that level, especially around Christmas or whatever. But
especially around these times right here.
Absolutely.
This is gonna be
Holiday
dropped during
season.
holiday season. Right after Halloween, it kicks in and you start seeing ads.
Right.
There are already Christmas stuff everywhere, right?
0% financing, 18 months,
it's
all
everywhere.
that. There's always a catch with that too. But as far as your credit utilization, you know, optimization is 15% or less. You never want that when you're getting ready to make a major purchase. Make sure that balance versus limit is no more than 15%. So if that's $1,000 credit card limit, you don't want the balance to be any higher than $150, okay? You want to make minimum payments on that for, let's say, 1 to 2 months. Then you'll pay it off, and then you'll charge it again, right? Now, if your credit score isn't still as high as you think it can be, do that for another 1 to 2 months, right? Go back, charge it up again for $150. Then make your payments 1 to 2 months and then pay it off again, right? Then once it gets to where it's going, whenever you use that credit card, then whenever you use it, pay it off right away. Because if you leave that balance on there, the longer the balance sits there, the more interest you're paying on it. So if you can financially afford it, you know, that's why you want to make sure you're not charging more than you can afford to swing, right? So if $200 is your monthly budget, charge it, then you're good, okay? So we love you guys. We appreciate you, and I look forward to seeing you next time.
Man, I'm your man, Anthony Smith, and I'm sitting here with my guy, James Laurie, and we got the man on the back end,
Mr. Wilson,
taking care of all the questions and comments that are coming in. You guys need to go ahead and pass this podcast on to the next, somebody that you guys can feel like can benefit. And I know sometimes we go sideways. We don't keep it straight to the numbers because we are here to drop our personal endeavors and mix it in with the knowledge that you guys actually want and need that are going to help you and your family get to the next level, man.
And friends.
This is a generational thing, right? We're not here talking to you just so you can hoard this information. We want you guys to spread this information because this is real information that's going to help you in your everyday lives.
And moving forward too, because really at the end of the day, it's about the kids. And again, we can't transmit something we haven't got.
Period.
So once we get it to work for us, then just by proximity, people are going to pick it up because they're going to be like, man, you were living like this, but now I see you living like that. What are you doing? You know, What are you doing? And then that word of mouth is going to really get out there. And that's what we need from you guys. So we appreciate you. We love you. And we look forward to seeing you.
We'll see you guys next week. It's Future Focus.
Bye.